Hey everybody, welcome back. So today I'm talking about a few other stocks that I am trading puts on. Guys, I know this is going to be a really volatile market. In the news, as many of you have heard, Russia is on the brink of invading Ukraine. I've been reading into that. It's just very rocky times. We really don't know what's going to happen. And so I'm going to show you just the strategy I'm using that is, in my opinion, to me, it's a win-win scenario because essentially when you sell put options, you're allowing yourself to get exposed into the stock if the stock drops even more. Okay, so right now the stock market has a lot of stocks have been really, really beaten up. They've gone down 30, 40%, mostly in a lot of it in the growth sector. But all around, like every company really has been hit hard ever since the highs in November. And so right now, I do think it's a fair time to get into it. Yes, there's going to be a big meeting in March where the federal government talks about what they're going to do with the rising inflation, with interest rates and all that. And so we're definitely going to see probably a lot more volatility. I think at this point, no one can really predict what's going to happen, but there's some specific strategies that I use, excuse me, that I use to make money in this market. And even if the stock continues to go down, I'm perfectly happy with it because I wouldn't mind owning those shares. And guys, I'm selling put options out far out just because I can collect more premium up front. So if I do get a sign, I still collect that premium. Okay, so I collect the full premium that is much higher than if I sell weeklies or monthlies. Guys, I know many of you have asked why I sell, puts out so far out. It's really just to reduce the risk. Okay, so because I've collected so much premium up front, that allows me to use that premium to offset if there's any further downside. Okay, that does limit my upside. Okay, so let's say the stock goes up in a year 30, 40%. I don't get that upside, but I'm completely happy, guys. Like in 2022, if I make 10, 20%, I'll be very, very happy with that. And so that's really why I'm utilizing the strategy. I'm selling put options far out on stocks that have been beaten down, but still have great fundamentals, and stocks that I do think are eventually going to be up in 1 or 2 years or even more. Okay, so without further ado, guys, this is just a quick shopping list that I'm looking at this week. I'm gonna show you the stock, and then I'm going to go into Robinhood and show you how the premiums play out. Okay, so before I do that, do want to mention that this is not any kind of financial advice. These are simply stocks that I'm investing in myself. Specifically selling put options on, and some of them I haven't gotten into it yet, just because I'm still contemplating if I should get into it. I'm still taking a look into a little more research into each of these companies. And so and one more thing I do want to mention, as always, guys, check out Interactive Brokers. I'm not sponsored by it, but they give you so much more margin on 1.59% interest, and you would definitely need that if you're doing the strategy. You don't definitely need it. It would help very, very much. You can get up to $1,000 in free stock right now if you sign up in the link below. They basically just multiplies your buying power and allows you to borrow off of your positions, both for buying stocks or just your daily expenses. Okay, so your credit card expenses, all that, you can put it on Interactive Brokers. Okay, so without further ado, guys, the first stock ticker, so there's two that I think is relatively safe. I'm going to start with those. These are in the food and agriculture business. Right now, guys, I don't know if you know, there is a food shortage all around the world, and that's not something that is very good. But there are companies that will I think inevitably benefit from it. Take a look into yourself. The Mosaic company, this is the first stock ticker MOS. Okay, they engage in production and marketing of crop nutrients. Okay, so this really helps with producing more crops and just allowing farmers to produce more food. And so right now Moss was down yesterday, so I quickly closed out. I quickly opened up two new positions. So this brings me I think four or five positions. I do have one leap option on MOS. And so if you take a look at the January 2023 option, you can collect about $640 off of a max loss risk of $3,560. So this basically means that you need to keep $3,560 in your account as collateral in case you get assigned, but you get paid upfront $640. That's great premium already just for a year out. Think about it, right? That's about 20% return. If the stock goes down to 42, you probably won't get assigned, guys. Like the person who bought this put option, they're not gonna assign these stocks because they pay so much premium, right? So if it goes down to $40, you still may not get assigned. And the thing is, if the stock goes up, guys, let's say MLS is up to $50, you're gonna have a profit on your contract. So let's say for some reason you need the money, you want to close out the contract sooner than later, you don't want to hold out for a year, you can close out the contract anytime. And so long as the stock is above the share price that you sold at, then you're going to make money and you'll close out that contract at a profit. Okay, so that's something I want to be extra clear on. So if the stock goes down to $42, you may or may not get assigned, probably not, but who knows. But you could be assigned, and if you're willing to buy the shares, 100 shares, every contract is 100 shares at $42, you're gonna get paid $640, guys. Robinhood makes it real clean just to kind of identify how the trade works. So if it goes down to 6%, you may get assigned. But guys, for you to start actually having a sort of a loss that includes the premium you collected, the stock would have to go down about 20%. I just don't think the stock is going to go down 20%. I really don't think so. You can argue otherwise, but take a look into the fundamentals of yourself. This company is a solid company, and so that's why I'm betting so much on it. If you open up a trade into 2024, you only collect about $200 something more. So guys, I would probably just open up the trade at 2023. If you want to be even safer, you can open up to 2024, but the proportion of profit you're collecting to the amount of collateral and versus all the time that you have on this contract, I think, in my opinion, it's just better to open up 2023. Okay, so that way in 1 year you're making about 20%. If you don't get assigned, if you do get assigned, who knows? You just kind of keep the stock, and eventually if it goes up, then you're gonna be fine. Okay, so that's the first stock ticker. Second stock ticker is also in the same sort of category and same business, or sorry, it's the same category. Okay, same industry. Okay, so it is Nutrien. Okay, so Nutrien, I've seen a lot of congressmen, politicians buy into it. I have been following capital trades, and so NTR is a company that is, in my opinion, very safe because it is a crop nutrient company. Okay, so it engages in the production and distribution of products for agricultural, industrial, and feed customers. Okay, so basically it's just in the agriculture nutrient company. Okay, crop company. So right now, if you sell a put option out, it's not as nice as MOS, but it's always a good idea to sort of diversify a little bit. So right now, guys, you can collect about $860 off of a max loss collateral of $6,140. So basically you're making about over 10% on this trade, which is not bad. If you take a look at 2024, you can actually collect a lot more premium. So I wouldn't mind this trade either. So you collect about $1,200 off of a max loss of $5,790. Okay, so not a bad trade, guys. Okay, the next couple stocks is definitely very different from the industry that we just talked about. First, it is Lumen Technologies. Okay, so Lumen Technologies is a telecommunication company, okay, located in Monroe, Louisiana, where I was born, guys. Can you believe that? Can you believe that I was born in Monroe? Shout out to all those in Louisiana, all right? All those people in Louisiana, shout out. That's my hometown. Okay, so it is a company in the Fortune 500 company index, guys. So this is not this is not a joke, guys. This is a $10 billion company trading at a P ratio. P ratio is price earnings. Okay, just tells you how expensive the stock is versus how much profit they're making. 5.20, that's very low. They pay a dividend of 10.09%. Okay, so if I get assigned, I'll be very happy because not only do I collect dividends, but I'm getting into a stock at a very, very good price. Okay, so let's take a look at Lumen, and this is definitely a great stock if you don't have a super large portfolio. I think a lot of these trades you can actually do with a very, very small portfolio. And so take a look, right? So if you sell put options out to January 2023, guys, you can collect. I would just go at the $10 because you're not gonna get. I'm pretty sure you won't. Even though technically you could get assigned, I just don't think they're gonna assign you. If you do get assigned, great. You just got what $186 worth of free shares in Lumen. Okay, so that's what 18 18 free shares. Guys, right now you can collect about $186 off of collateral of $814. So if you have $814 and you just want an easy $186, I would open up this trade. If you do get assigned, you collect $186, and so you basically get the stock not at a discount. It'll be the share price that you have right now, but you collect $186. So that's almost like getting 18 shares for free, right? So I would definitely consider that trade. If you take a look at the 2024 chart, okay, so you're making a little more. Okay, so you're making $253 off of a max loss of $747. So that is, that's a even better trade. I think that's almost like over 15%. Okay, over 15% profit on this trade. Guys, Lumen Technologies is a company you definitely want to take a look at and consider selling put options on. For this stock, I actually wouldn't mind just buying shares, but because I'd rather collect money than outright buying shares because I really don't know what's going to happen in the stock market. That's why I'm selling puts. Or another way you can trade this is if you want to trade leap options. Okay, so leap options is when you just buy a call option at least a year out. That's something that I did more so in 2021, but because 2022, there's just so much volatility, I'm mostly selling put options. Okay, so let's take a look at the next stock ticker. eBay. Okay, eBay is you guys must have heard of eBay. Okay, if you've ever sold or bought anything on eBay, you would know of eBay, of course. But guys, right now eBay is selling at a super low P ratio of 3.19. Guys, eBay 3.19. That's even lower than Lumen, guys. That is insane. They do still have a market cap of $36 billion, dividend yield of 1.24%. Guys, I don't know why it's trading so cheap. I'm gonna take a little more deeper look into it. But eBay is just a solid company unless something huge has changed about it ever since I last used it. Guys, eBay is my bread and butter from when I was in high school, right? I sold a lot of stuff in eBay. That's how I fed my my college stomach. Okay, so when I was in college, I had to fend for myself, and so I sold a lot of stuff on eBay. But let's take a look at eBay. Okay, so right now eBay is trading at. Let's take a look at the 1-year chart. Okay, so eBay hit $76 in October, $80 in October, and now it's down all the way to $58. Okay, so let's take a look at eBay. If we trade options, okay, we sell put options out to 2023. Guys, right now we can collect about $743 off of a max loss of $5,000. That's not bad. That's over a 10% return. That's like 12%. Let's take a look at 2024. So you can collect about $1,000 off a max loss of $4,745. So it's not the best premiums, but guys, in my opinion, if you're bullish on eBay, if you don't think eBay is going to fall another, 17, 18%, then I think this will be a great trade. Okay, so it's not one of the stocks that has the best premiums, but I would definitely consider that. Okay, so let me show you guys some stocks that have great premiums now. Okay, so this is kind of fun. These two are, I'm just going to wrap it up at 5 today. I'm not going to do a whole lot. So the first stock ticker is just Coinbase. Okay, so if you're bullish crypto, if you are, into Bitcoin, Ethereum, all that, you would have heard of Coinbase. Coinbase was one of the first companies that I started using to trade crypto. And, ever since then, it's grown significantly. in users and just a lot of what they're doing. Okay, so right now it is trading at a pretty low P ratio of 19.95. That's not too bad. They have a market cap of $42 billion, so it is a significant company. So if you take a look at the 1 year chart, guys, Coinbase is down from its all-time highs at $357 and trading at $195 today. And I think partially because, of course, like all the cryptos have been down quite a bit. So that could be, one reason why it's trading so low. But let's just take a look at how much premium we can collect if we're bull coin. Okay, so right now, if I sell a put option out about a year out, January 2023, I can collect about $4,720 off of a collateral of $14,000. So that's almost 30%, right? That's about 30% return in 1 year. That's not bad. And of course, this is probably because Coinbase probably has a little more volatility. Let's take a look at though if we sell it in 2024. Okay, so I can collect $6,000 off of max loss of $13,000. That's almost 50% return. Okay, so that is insane, guys. If you want to collect 50% return on one stock, I would definitely consider Coinbase, especially if you're bullish on crypto. Now, one thing I would note is Coinbase does have more and more competitors. There's a lot of companies popping up that is going to be trading crypto. So that's just one thing to consider. I actually have not opened up Coinbase or eBay, so just a full disclosure. But it's just something I'm considering. Okay, one more stock ticker is AMD. And while I'm at it, I'll probably look at Nvidia too, just kind of see. I don't think you can collect a whole lot, but AMD, guys, is a stock that I am bullish on. In the semiconductor industry, I do think they have great leadership, trading at a P ratio of 44.41. That's not too bad for this high growth company. There's definitely in the growth sector. $137 billion cap. Guys, it was trading at an all-time high at 155, and right now it's at 114. Man, I wish I had added more into the position, earlier this year when I was trading at $80, but, you can never, it's always, you can never just look back and speculate, okay? So you have to sometimes make the move that you have strong convictions on, okay? So AMD, let's see, if we sell a put option out into January 2023, you collect about $2,000 off a max loss of 9,000. So that's almost 20%. That's about 20% return a year out. That's not bad for AMD, guys. I would definitely consider that heavily because I'm very, very bullish on AMD. Let's just take a quick look at Nvidia, because I know Nvidia stock is basically the competitor in the semi industry as AMD, but Nvidia has been down, okay, this last year, or this year, as with every other stock. And right now I can collect about 4,400 off of a max loss of 19,000. So that's not bad. That's about, I don't know, like 20% return. Yeah, about 20% return. That's not bad. All right, let's take a look at if we go into 2024. Okay, so that's not bad at all. There's some pretty good trades with Nvidia that I would consider as well because I'm bullish on Nvidia. Okay, so I hope this content is helpful for you guys. As always, feel free to ask any questions. I'm always happy to respond to them. If you like my kind of content, if you want me to make more videos like this, make sure you smash that like button for the YouTube algorithm. I would really, really appreciate it. And make sure you subscribe if you haven't already. Okay, so until next time, guys, invest safe, and I will see you guys in the next video. With every star